Hello, and welcome to episode 6 of the Desert Island Investor Podcast. I'm rowing myself to the mainland for the weekend because some bloke washed up on the beach and Mark wants to talk shop with him about investing. We've only got 2 chairs, so I've left them to it. Anyway, I hope you enjoy Mark's interview with our first guest castaway, investment consultant, podcaster and stock market legend, Mr. Jeremy McKeown. Is that a shark?
Jeremy, thank you for joining me. For those that don't know you, and for the benefit of our listeners, can you give some details as to your background?
Well, yeah. Hi, Mark. It's lovely to be cast away with you. I've been working in financial markets pretty well all my career. I'm just turned 63, and I've retired from full-time work. But I started out in the early 80s and retired, as I said, from full-time employment just before lockdown. And today I work as a consultant for a couple of city firms, and I guess I've evolved into being a bit of a pluralist. I write a blog which is called Hypernormal Times, which is really about the macro backdrop, what's going on in the world, and particularly as it relates to how you should think about the world, perhaps, or how I think about the world, at least, from as far as it pertains to investment and what to do with your pension or ISA and how to think about it. And as a bit of a lockdown hobby interest, having become sort of quite addicted to listening to podcasts during lockdown, I decided to launch my own podcast series, which I called In the Company of Mavericks. And it's a series that I've developed over the last 18 months, couple of years, where I talk to successful entrepreneurs and founders of companies in the UK who have found themselves listed on AIM or the full market, and are typically their personalities or their characters that are the driving force behind some of the companies, some of the most successful companies in the listed space have people who think and do things a bit differently, and that's what I wanted to focus on. I just think it's an area that is professional investors and working with professional investors and listed companies as a professional, you get to meet these characters. And I'm thinking of people like Mike Ashley, Tim Martin of Weatherspoon, people who have a view about how things should be done and they go and do it. And those are 2 very successful examples. But they're treated by mainstream media, by the rest of the world, as being outsiders, and people and are often criticized for being different, rather than people focusing on the fact that by doing something different, it gives you the ability to be very successful.
So you've had a career of 40 years within the city. Has the profile of your roles across that time changed a lot, Jeremy?
Not a lot. I started work but I started out back in the early 80s, 1982, I think it was, on the buy side as a fund manager, and moved into the sell side as an institutional broker and corporate broker in the late about 1986, so a few years later. So very early on, I was on the buy side as working for fund management organisations. Started out not a million miles from where you are, Mark, is in the lovely town of Barnsley in South Yorkshire.
Oh, that's a long way away from us. That's on the wrong side of the Pennines there.
Yeah. So I actually started out in 1982, I think it was, as a trainee investment analyst for South Yorkshire County Council Pension Fund, situated in the town of Barnsley, South Yorkshire. Yeah. So over that 35 odd years, I worked mainly on the sell side, mainly working in small cap broking. So I was basically front of house, talking to investors, talking to small cap fund managers, institutional fund managers about investment ideas, introducing them to companies. And as a result of that, came into contact with the management teams of lots of smaller companies. Was involved in quite a lot of transactions. We did a lot of IPOs, did a lot of secondary fundraisings. So yeah, that was typically what I did.
Sounds like there were a lot of lunches involved there, Jeremy, over those years.
There was a lot of drinking early on, back in the day. Quite a lot of lunches, and and I think probably there were I mainly worked for local brokers in London, but I found myself in early 2001 running a team at Merrill Lynch. This is sort of pre-global financial crisis. This was the era of, when the global bond markets and the people who operated in global bond markets were considered to be the masters of the universe. And, financial markets almost seemed to rule the politicians. I think it was one of Clinton's guys who said if he came back, he wanted to become the bond market because because of the power they had on the way the world worked. So that was I'm mentioning that because that was that was a time when you just felt like the world was at your door working in financial markets. And I'm not saying that's right or wrong, but it was a thing, and the world's changed significantly over the last 20 odd years or so because I think the GFC, the global financial crisis, neutered the banking system to a certain extent, and things are different. But yeah, it was privilege. I think is the word I'd use in terms of working with and dealing with very clever people, incredibly clever people, both people who were colleagues, who were peers, competitors, but people who were clients, who were investors. I mean, incredibly hardworking, very diligent, very passionate investors, all shapes and sizes, all ways of doing things, all different strategies, quite complex in terms of an ecosystem, an environment. But also the management teams, having a good look at the way these people operate under extreme pressure at times, because, doing an IPO of your business, raising money in a difficult market or raising money at any time, is stressful, and you get to see people operating under pressure, and that's instructive. And you can learn a lot.
There must have been a lot of testosterone flying around there.
Yeah, I guess so. Certainly back in the old days, I joined the city pre-Big Bang. The stock market was more like an exclusive members club than what we would know as a financial market today. And there was, there were gentlemen's hours. And you had to pay fixed commission. It was a fixed market. So, the Thatcher Revolution, the Big Bang of '86. People talk a lot about what she did to the unions and breaking up closed shops, and what she and Murdoch did to the print unions, for example, which were our neighbours, in Fleet Street in the old days in the city. But she bust up the stock exchange as well, and they were both very important things to do.
So that's a little bit about your background. I just want to steer the conversation now to your own personal investing. And I know these things can be multi-layered, but can you detail your kind of strategy or framework that you work to?
Yeah, I'm not sure it's that well constructed.
Right, it's a bit loose then, is it?
It's probably better constructed than it has been historically. So I've always invested my own money. And I suppose gradually became more serious about it and more structured in how I thought about it and operated as I grew older. And along the way set up ISAs and started managing my own pension about a decade ago. But it was sort of an evolution over quite a long period of my career where I sort of picked up, got to know fund managers who, meet a lot of fund managers, and you just sit in a lot of meetings and you see a lot of the questions that fund managers ask of companies or of analysts or of, the way they look at the world. And you go, yeah, actually, I'd put my money with him or her, and maybe I wouldn't with them. And likewise with companies, sometimes there were, increasingly through the period I worked, there were more and more regulations and which you had to comply with regarding conflicts of interest. But so that often defined which companies I could buy or couldn't buy. So it was sort of piecemeal to start with. And I think what really started focusing my mind on how I should structure my thinking about it was when, after I retired. I mean, I stopped full-time work a week before the world went into lockdown, and so I was sort of left with my little pot of money and a sort of an eclectic mix of investments. And I just thought, well, I need to sort of do what you asked me about, which probably I should have done years before, and actually just sit down and think what it is, why am I doing this, and what do I want to achieve by it. So I wrote myself a little memo during the early stages of lockdown, and I tried to formulate 10 lessons from the sort of career I'd had about how to invest my money or how to invest money. And they were, the types of companies to look for, but also things like have exposure. I think lesson number one, this was, bear in mind, this was middle of 2020, was have exposure to real assets as well as equities. And, I've owned fixed income securities in my time, but I don't think I've ever owned a government bond, and I don't think I ever will. And but obviously, if you want to preserve wealth, particularly as you become older, you don't want excessive volatility. And because of my background in smaller listed companies, although over time smaller listed companies offer you the highest prospective return, they're also volatile. They're also riskier in a volatility sense. And being able to tolerate volatility is more difficult if you're coming to the stage where you might want to depend more on your investments.
Just on that, on the motivation for investing, what was my first motivation for investing was to was to get out of the world of work as quickly as possible. If I'm being honest with you, I mean, I think I was still doing the sandwich run in the office when I was thinking about retiring. That was the kind of, I'm being have to get to this fixed place, 5 days a week, and be instructed what to do. There must be something.
So where did you get the? I know you're asking me the questions, but where did you get the bug from in your environment? Where did you get the idea of investing in companies?
The first thing was the Thatcher privatisations. And I'd always had as a schoolboy, it was a strange kind of unconventional interest that I was reading the financial papers for some reason. I don't know why, because I'd no background in any kind of investing or.
So you cut the coupons out of the paper to buy the shares in British Gas. And
that's
British
it. I think the first one was actually British Telecom at 18, and that really was a gateway. And then they were. I
think I made £5,000 from the privatisation, or maybe somewhere between £5,000 and £10,000. And that was a lot of money. That was a year's salary.
And they were priced to promote share ownership, weren't they? They were priced for people to think, hey, let's have a look at this. And we did do. And we developed into other things, and it became a lifelong interest. But did you was there a motivation for you? Was there a goal to get involved in investing yourself? Or was it just a case of I should put some money away for the future? A general kind of mindset.
Well, like you, my first investment was direct investment. I mean, my first direct investment was the Thatcher privatisations, the water companies, BT, British Telecom, British Gas, and I did it because everyone else was doing it. It was the world I was living and working in, and I was working for an investment department of an insurance company at the time, and it was extra spending money. I wasn't trading, but I wasn't holding these investments. I didn't have the idea that I'd own BT shares or British Telecom shares for the rest of my life at that stage. It was a way of earning a bit more money, and if I think back to a few years after that, and sort of before Big Bang, I was working when I first started working in stockbroking business. We had things like there were many. Insider dealing wasn't a thing. Wasn't a criminal offence until Big Bang, and the stock exchange was a club, and being part of that club meant you had access to the information that companies revealed. You got the information before the rest of the world, and people had to pay a fixed commission to get access to the stock market. I mean, it seems incredible, but that was only in whatever it was 40 odd years ago. But they also had this thing called the account period, a 2-week trading period, where it took any trade within that period was settled the following week. So you had a 2-week trading period, the account, where if you bought shares day one of that account, anytime in the following 2-week period, you could settle in the account without putting any money up. So if your shares went up, you closed within the account and they just sent you a check. If the shares went down, you had to pay the difference. As a member of the stock exchange, it was incredible. I remember as a young broker, I had in the account positions in stocks. I mean, horrendously risky. That there was no way I could afford to settle. I would have to. No way. And I wasn't alone. Everyone was like that.
Yeah.
I mean, and it was that was the accepted practice.
You had to get it right then, didn't you?
Well, you had to know. It taught you about risk tolerance, I guess, but the risks were certainly asymmetric in your favour in a way that betting on the horses wasn't.
So would you say it's a more of a level playing field between private investors and the city?
Now,
Yeah.
massively. And one of the reasons I did the podcast and started writing the blog, I mean, not in a preachy sense of duty or anything like that, but I mean, I think there is a healthy resurgence of private retail investing activity in the UK, largely driven by the greater it's cheaper to trade, it's cheaper to buy and sell shares, and the information is available. They've got this thing called the internet, and it's pretty amazing, and it's instantaneous, and it levels the playing field. Now, professional investors get the best of the best. A Bloomberg terminal is very expensive, but it's very good, and most retail investors can't afford one. One of the things that, as I said earlier, one of the things that professional investors get is access to management. Now, the internet levels that playing field too. So, we can have webinars, and there are platforms where company managements can meet any investor. And post-COVID, management teams spend more time doing Zoom calls or their equivalent than they ever did before. And I think that's a good thing, because we can all go and, if not watch it live, certainly watch a recording of a results presentation. But these characters, people, entrepreneurs, people who solve problems in the real world, and they look at the world differently, and they back themselves to do it better. You might be able to read about them. You might be able to get the numbers about their business, the results, read the report and accounts, but you can't get inside their head. You can't chat to them. So hence the reason I did the podcast, because these people I think are interesting. And if you're going to be a conviction long-term investor in, say, let's take Burford Capital, a business that's quite complicated. It's a bit opaque by the nature of what they do. It's the pioneer in litigation finance. But if you don't know Chris Bogart, who's the founder of Burford Capital, it was his idea, and you don't know his origin story and why he's committed to it and what his vision of the future is, you won't get the conviction to stay in Burford Capital when things get tough, when the shares go down and there's the things that, and hold, if you want to be a serious long-term investor in equities, you've got to develop conviction, back yourself and hold it. And you've got to know, have the balls to add to it when things get tough, or at least hold on to it in the knowledge, or if you think the investment case hasn't changed. And to do that sounds easy, but it's actually very difficult. So that's the reason why I launched the podcast series, and because I think, it sounds very, very grand, but it kind of democratizes it. It spreads the availability of these people, insights into what makes them tick, to anyone who wants to listen to it.
Yeah, it's not a cosy little club now, is it, investors? There's lots of us out there, or it's within the realms of most people to have some kind of an investment. Yeah, when you were approaching the island, I thought I'll come and give you a hand, but you're cutting through the waves majestically, because you're a very accomplished swimmer and you were once an Olympic hopeful, and it was this that led to you going to the United States, and we'll just come on to that in a little while. But just regarding the swimming, and it might be a little bit of a stretch, but you've spent countless hours in that pool pushing off that wall.
Yeah.
Has that given you any transferable skills? You've spent a lot of time doing this, but in any way, is it perhaps, working towards a goal, or perfecting a technique, or dedication to a task, or just do it? Sometimes you've got to do things that you don't want to do every day. I'm just wondering, have you been able to use that? Or
just being thoroughly boring? I don't know. I don't know, maybe a bit of all of the above. I think, maybe, I mean, what it has done, what that period did give me was a real sense of the benefits of exercise, both for physical and mental health, that I don't think I really appreciated until really quite recently, within the last 10 years or so. Because I always, I think because I swam so much as a kid, and we were doing, sometimes we were swimming, up to 10K a day, in the pool. I mean, it's a lot of lengths of a pool. Not every day, but, up to that amount. I mean, and when it came to doing cross country at school, I just kept going. I wasn't really interested in cross country, but I found myself winning because it just kept going. And because I got a stronger heart and lungs than anybody else because of what I was doing. And it sort of took it for granted. And, when I stopped swimming, I took up running. I've run several marathons, done the London Marathon several times, run the New York Marathon. And I sort of toned that down a bit. And I don't run regularly anymore, but I exercise a lot. I still swim. I do outdoor open water swimming, and I spend more time, I think, than most people sort of exercising. And the reason is that what I noticed, I think, is when I was swimming when I was at school or at university, and I was swimming, probably did most concentrated form of swim training in the 3 years I was at university in the States. I was contracted to swim for them, and so I had to, it was pretty intense. But what I noticed was that the more I swam, the more time I spent exercising, moving my body, the easier I found my studies. And I always thought, well, and the better I did in exams. And there's 4 academic quarters in the US education higher education system, and swimming takes up 2 quarters, and the other 2 quarters you have to keep fit, but you don't have to. There's no competition, so there's less training. But I always did better in the quarters where I was swimming, sometimes 4 hours a day, most days 4 hours a day. And I, up until that point, I always thought, well, it's sense of discipline. You're better organised because you've got to get up, you've got to go to practice, you've got to train, you go to your lectures, you do this, you eat properly, you go back, and you get to sleep on time, and because you've got to do it again the next day. But it's and I think there is an element to that. But I think there's a direct relationship. Not just, we all know that if you exercise more, there are physical benefits. You're stronger, you can run for longer, you can run for that bus and all that sort of stuff. Or you can walk upstairs. It's easier to walk upstairs, all that sort of stuff. But I think it's a direct impact on your mental health, and not just feeling good about yourself because you've done this exercise. I think there's a direct relationship between movement, physical movement, of any type, physical activity, and the stimulation of your brain and your ability, your mental acuity. And, I've done some sort of desktop research on this, and, there's quite a lot of evidence out there. And, that this is the case. And I think it's not particularly well understood. But the only reason we have a brain is because we can move. If we didn't move, we wouldn't need a brain.
Right. Well, I'll tell you what, you've motivated me. After this podcast, I'm definitely going for a run across the beach. All right.
Yeah, so you're very lucky.
Yeah. So, when I was a teenager and I was watching things like the A-Team and Dukes of Hazzard, you were out in Atlanta, Georgia.
Yeah.
So, the world was a bigger place back then. We didn't have rolling news and the internet. Was it a massive culture shock? And I'm just thinking, stereotypically, we still have the US out as more dynamic and go get it across the Atlantic. Well, have you found that, part of that was that influence was it imparted onto you?
Yeah, well, it was certainly a very different world back then. Communications were very different. Way too expensive to ever think about phoning home. There was no internet, of course, no WhatsApp. So I used to write to friends and family back home by letter, by airmail. And yeah, at times you sort of lived your life, from one letter to the next. It was, so yeah, very different. Never been to the States. I was 18, travelled around Europe, but I'd been to a lot of different European countries through swimming as much as anything else. But I'd never been to the States before. Yeah, it was a huge culture shock. Not least just the standard of living. I was back in those days. If you qualified to go to a university, you got a full grant. So I got paid by the UK government in terms of a grant, and I got a full scholarship from the university from Georgia State because of my swimming, and it was I lived like a king. It was, but yeah, you're right. The American attitude is very competitive, and I went into a world where, as an 18-year-old, didn't really think of it this way, but I was contractually obligated to go to practice and swim for the university. They were paying for my education because they thought I would add to their athletics program. And just take university athletics, the NCAA. That's in those days it was pre-Premiership. I would guess the revenue generated by the NCAA. Bear in mind, university football and basketball are, they have huge stadia for both sports. They're televised matches. They generate revenue. These universities are very wealthy due to their sporting their athletic programs. So it was, in a very real sense, although swimming's, not a revenue generating sport, the NCAA is set up so that all the money generated from the big programs, football, basketball, baseball to a certain extent, has to go back into the athletics program of that university. That's what the rules were in those days. Hence the reason people who were doing the minority sports, such as us swimmers, we got paid to swim. Well, not paid to swim directly, but we had our education expenses covered. So it was, and the Americans love to make their sports competitive. So, up until that moment, swimming even if you swim for a club, you're really swimming for yourself. It's your personal best. You want to be the best 200-meter breaststroke swimmer in the county, the district, the country. Well, that's what I did anyway. That's what I wanted to do. And, at the age of 16, I'd done that. And hence got the interest, got the opportunity to go and compete in the US. But in the US, they create the NCAA swim meet is a totally different thing. First of all, you're in a 25-yard swimming pool, so it's fast. This is like swimming in a bath compared with Olympic-sized pool. It's very fast, and they have the NCAA dual meet where Georgia State swimming against Georgia Tech. It's head to head, and it's each of the meet is fast and furious and very competitive and very tactical. The coach, he's only got so many swimmers, and we've all got to do more than one event. And the dynamics and the team camaraderie are totally different to swimming that I'd experienced up to that point. So, yeah, it's sort of every aspect of US life to me compared with, I think it's maybe different today, in terms of, as you said, the world is a smaller place today, but it was stark, the contrast between attitude to risk, attitude to competition, attitude to, in sort of outside of sport, I was into economics, attitude to markets, attitude to political in politics, in individual freedom. This is in the deep South. There are all kinds of history of politics there, but one of them was the Second Amendment, the right to bear arms was and is just part of everyday American life. I'd never seen a gun before I went before America, and the university, on the university campus at Georgia State, they have their own police force, and the police, they're not much older than I was, and they were carrying guns.
Now, you're obviously a very, very inquisitive person, and you mentioned the blog that I read, and you put lots of material on LinkedIn, but a lot of it's macro that I just don't tend to have the brain space for a lot of all this, and you put a lot of stuff out, and I'm just wondering, is it difficult for you to process all this information? And it's okay, talking about it, but I meet a lot of private investors, and they talk about, when are we going to come out the bear market, and when are inflation rates going to peak? And they spend all this time doing it, but I think, well, how are you applying this to your own investments? So can it all get a little bit muddled? I sense that some private investors, they just end up in like a state of paralysis. So how do you filter it all?
No, I agree. I think it's there's a big risk, and I think one of the reasons I started writing the blog was maybe to, there's several reasons, but one of the reasons was that maybe some of the people I know who sometimes ask me about investing their money, and I can take some of the burden off their shoulders and sort of tell them what I think is going on and where I think things are going, so that they can concentrate on the much more important bit. If you're investing in equities, that is, what's a good company? What companies do I like? Where do I think I have a bit of an edge in understanding why this business is going to be, this business opportunity is sustainable and can grow and can compound over time, which I think are the more important element to the equation of understanding how to invest in equities. It's picking the right stocks or picking the right fund manager. And over my professional years, I watched dozens of institutional investors operate. Some of the very cleverest, some of the best informed, aren't always the best investors, because you get this sort of analysis paralysis. You can't see the wood from the trees, and it's definitely a risk I'm conscious of. But what I've found writing does, it gives me an outlet. So I spent 40 years, or certainly the last 25, 30 years, writing emails to my clients, at work, about what is going on in the world and how they should think about investing in whatever it was the company I was working for at the time had to offer. And I had to try and position these things in the context of the strategy that I knew they were trying to achieve. So when I stopped doing that, and I found that challenge quite enjoyable, I needed an outlet. So hence the reason I felt like I needed an outlet rather than just reading about what's going on in the world and shouting at the wall. I just thought maybe I put it down on paper, or put it down in, post it. But the main the other reason that I do it is because it helps me organize my thoughts. And when you don't have that discipline of, putting your thoughts down in a way that it makes sense for someone else to digest, and particularly when that person or those people who are going to read it know as much, if not more, about what you're writing about than you do, makes you bloody careful, and it straighten out any sort of wonky thinking, and just before you press that send button or that publish button, you make sure you've thought it through. And I find myself. So yeah, sometimes it's a distraction. Sometimes I get to, I go off on a tangent, and my curiosity sort of carries me away in something that you just think, well, maybe that's getting a little bit too. It's a little bit too inconsequential, maybe. But I think also the other thing though is, when I started this in 2020, we're in the middle of lockdown. It made macro much more consequential. Actually, it made the world became macro. It was like a period from maybe 2010 to 2020. It was all about which stocks you owned. It was. I think the period since lockdown is much more about what are the policy, what are policymakers doing, what's the Fed doing, what are other central banks doing, what's the geopolitics look like, what's the energy, what's happening in energy, what's happening to inflation, what's happening to bond yields. Oops, something's broken. It's been macro driven. So I found myself, I guess, not under the constraints of doing a 9-to-5 job for somebody else in a pigeonhole. I guess that's either the risk or the opportunity that you can kind of more roam where you want to go.
Now, you mentioned the podcast that you do in the Company of Mavericks, which I think for anybody listening is an excellent podcast, and it's that good. It's nearly as good as mine. Right? But I'm just wondering on that, why specifically Mavericks, and what have you taken from this? How does it help, or does it help your process?
Yeah, well, it's very nice of you to say so, and it was purely a lockdown hobby interest that I developed, and it's a bit like writing the blog, I guess. It just sort of just another area of trying to continue elements of the job that I was doing professionally, taking the enjoyable elements out and continuing it in a different form. Mavericks, well, when I was in Atlanta, Georgia, in the late 1970s, early 1980s, there was a local hero, a guy called Ted Turner.
Oh, yes.
Who ran a business called Turner Broadcasting, TBS, Turner Broadcasting Systems. And he owned the Atlanta Braves, the baseball team, and the Atlanta Hawks, the basketball team. He'd inherited from his dad, a bit like Rupert Murdoch. He'd inherited from his dad a outdoor advertising business in Atlanta, and he bought local newspapers, and I'm not sure about newspapers. He bought the local TV station, local TV station. He built up, because of his ownership of the sports teams. He started broadcasting nationally, I think, baseball games or sport. He was known for sport. And he had this crazy idea that there could be such a thing as a 24-hour news channel. And there was this new thing called cable television. And he set this thing up called CNN, Cable News Network. And most weeks, the local Atlanta media press headlines were, a new update on how close Ted Turner was going, how he was going to go into imminent bankruptcy. And this was the end. He'd bet the family ranch literally on this crazy idea that the world could digest news over, continuously. And he put everything into CNN. he'd geared himself up to the eyeballs. He'd done this, he'd done that, and it was just a matter of time. I can't remember all the detail, but of course that didn't happen, and CNN was eventually bought by Time Warner, and he became a multi-billionaire. And he's a maverick. People didn't like him. They were the establishment were dead against him because he just, never met him. Probably wasn't a particularly nice person, but he was definitely a maverick, and he was right. And I think that was quite formative. And when I fell into the world of small cap investing, the people I gravitated to tended to be the founders of businesses who, one of the people I came across in the early 2000s was a guy called Jonathan Milner, who had a company called Abcam. And Jonathan was a Cambridge research biochemist. He was doing research with antibodies, and he had a problem because he was doing experiments with and research on different types of antibodies, and he was, obviously to have a scientific experiment, it has to be replicable, so someone could disprove your hypothesis. And he couldn't get a standardized form of an acceptably standardized form of antibody that was consistent and therefore usable in researching for in the area of biotechnology. So he set up his own company where he basically set up the indexation. He set up, the equivalent of the FTSE 100 for antibodies. He indexed them so that they could be replicable. And he solved a problem that he had as a research scientist and became a billionaire because that was his domain knowledge. He knew something about the world that other people didn't really understand as being a problem. He knew it was a big problem, and it became a much bigger problem because, what do you know, this whole thing at the time was cracking the human genome. And to do that, you needed reliable, falsifiable antibodies. And Abcam is now listed on NASDAQ. It's worth a few billion quid. I think he's probably still got a shareholding. He's no longer involved in the management of the business, I don't think. I don't think he's even still on the board. But that's exactly the type of character that I think is underappreciated by a world that wants to understand things as being normal.
It's interesting that we're in a world that increasingly, if you look at the corporate world, we want people working to set operating procedures. We love mavericks, though, don't we? There's just something about it's like almost like kind of any detective subplot is the hero. He's not somebody who's assiduously completing his paperwork and putting his reporting on time, is he? He's like his life's in chaos, and he's not doing things by the book. It's interesting that we like to buy into these type of people, don't we?
Well, yeah, we do in fiction, but I think maybe I don't know, but I just think in the real world, we sort of don't allow ourselves to believe it. Maybe, I don't know, but it doesn't necessarily follow just because you're a maverick, you're going to be a successful businessman. But if you want to be a very successful, if you want to be the most successful business, the most successful business people are atypically represented by mavericks. I mean, think of Jeff Bezos. Everyone thought he was crazy, to sell books online. Elon Musk. These are not normal people.
Perhaps it's that they're going to either, if you're a maverick, you're going to either succeed or fail gloriously. That's perhaps what it is. Yeah. But there are other things that. So you don't.
it's not a catch-all term. It doesn't, as I say, but I think these, and not all the people I interview you would regard, have the classic maverick personalities, but it's about having deep domain knowledge and a focus and a focus on an area, and a strong sense of purpose, and they create a culture of this sort of culture of being, from being outsiders. So they get a cohesive team around them around this maverick culture. But it becomes their life work. So they end up being quite big shareholders in these businesses that become listed, and that they then hopefully develop, or if they don't, it's identifiable that they don't. But they get a sense of how to allocate capital. Their capital is at risk. It's coming back to this. Don't ask people what they should be, what they think you should be doing. What are you doing? Where's your money? Some of these people, these people I would term mavericks, these founders of businesses, I don't know, say they're running 100 million market cap company, say they own 20% of it. So they got 20 million quid at risk, and they've taken out a bit of money on the way. Say they've got another 5 million quid managed for them by professionally by a wealth manager. They worry far more about the 5 million quid than they do the 20 million quid. They know what's going on in the 20 million quid. That's their world. They know all, they think long and hard about it. They don't put that at risk. They're rational, if they're rational actors, or, it doesn't always work, but it adds, that if you're backing a founder of a business, you're changing the odds, because you're backing someone who's got real skin in the game.
Yeah. Right. Well, you're here on the island, Jeremy, and you're more than welcome to share what we can offer. Paul and I can offer in the form of shelter and fire, and as long as you're okay with a strict fruit and seafood diet, then you'll be okay. But just as an exchange, in exchange for that, we ask that you share one or more of your conviction holds with us and give us the investment case. So I'm just wondering if that's something you can do.
Okay, yeah. So I met a company called 4Imprint. I met the management. He was the London-based management at the time, probably around 2010, and was blown away by what I heard. And one of the reasons I was blown away by what I heard is because I knew a little bit about the background of the business. And for those people with long stock market memories, 4Imprint was born out of the ashes of a company called Bemrose Corporation, which you probably knew in your day in the paper industry.
Yeah, that's right. I used to sell them some paper, or the company I did used to. They were into check paper.
So they printed, among other things, they printed checkbooks, which, not surprisingly, didn't have a prosperous future ahead of it. And as a lot of these old print and paper and packaging businesses had, they also had, with tied around their neck, quite a large pension fund liability. But as luck would have it, along the way, before the check printing business got into trouble, a previous management team had made a series of acquisitions, and one of the companies they had bought was a promotional products business in Oshkosh, Wisconsin. Can't say that.
That's easy for you to say.
Not with my teeth in, or not. And 4Imprint happened to be a gem of a business that I don't know, but I strongly suspect the management team that bought it didn't really understand quite how strong and durable business 4imprint actually was. But 4imprint was a business that has and continues to disrupt the markets it serves. And it basically serves the American appetite for affiliation with other organizations. So when I lived in the States, one of the things that became apparent was that if you went to Georgia State University or Georgia Tech University or the University of Georgia or Emory University, which is also in Atlanta, or you belonged to a church, and there are hundreds of churches, or a synagogue in the Atlanta area, or you were affiliated to whoever or whatever, you wore a T-shirt, you wore a badge, you had a coffee cup, you had a baseball cap, and you carried the affiliation with you proudly. And you see this today in every aspect of American life. They don't know why, but they do. They want to identify with the organizations that they are employed by, they worship at, they play, their sports teams, their high schools, everything. And there's a very strong industry. It's a very promotional product. Serving this market is a very disparate and fragmented market where there are suppliers and agents, and typically it comes down to, or it used to come down to, and I think to a certain extent it still does, where there's a mom and pop business, and they go and visit, or they have local customers, and there's a big supply chain where the big manufacturers feed the product down to these small distributors. 4imprint totally stood that model on its head, or has done over a number of years, and basically Kevin Lyons-Tarr, who's the CEO and been the CEO there for 30 years, joined the business he was previously a technology guy, a technology salesman, and someone who understood how the adoption of technology can drive efficiency in a business. And he's basically taken 4imprint and developed it into a business that serves this market. It's quite a low gross margin business, low single digit. It's not, on the face of it, an attractive business because you're basically a distributor. You're taking product, say a white T-shirt, printing or embroidering a logo on it and shipping it out. So it's low value add. But they managed to do it with a model in what I would say is a drop ship model from their suppliers, which means they effectively carry no stock. It's a rapid turnover, very high service level, low order value business, where they're delivering, they're looking after hundreds of thousands of orders a year. I think it's over 1 million in recent times. And they do this with ruthless efficiency, and they are able to completely, so that their gross to net profitability is exceptional. And because they have no working capital in the business, their return on investment is way, it's 30, 40%. It's way up there. It's off the clock. And this business has grown consistently over the last 10 years. I'm going to say when I bought the shares, they were £3 or £4. Today, they're between £45 and £50. They've never issued any further equity. I don't think they've ever issued equity. They're very cash generative. They control their own destiny in terms of turning up and turning down their marketing spend. And they've filled the void of where Bemrose Corporation was before its demise. And I think it's one of the interesting aspects of the market. These these sort of companies that become other companies. They grow out. They're the offspring, unwanted offspring of other companies. I'm not saying 4imprint was an unwanted offspring. I'm thinking of
Howard and Joinery or something
Howard
like that.
and Joinery. Howard
Yeah.
and Joinery. Thank you for filling my dreadful memory. Which grew out of the demise of Magnet and Southern, I think, or no, MFI. Pretty sure it was
Do you
MFI.
remember them? Yeah.
Yeah. Mission effing impossible is
Made for idiots.
made for idiots. Yeah. I digress, but I mean, the unwanted children of companies. What's the other one? Agreco. Do you remember Agreco?
Oh yes, the power generators, aren't they? External power generators.
Do you remember Christian Salverson? Which was
They were a shipping company, weren't they?
Transport company, and the biggest single factor in their profitability was the pea harvest, because they used to ship peas from Lincolnshire to Birdseye,
Right. Okay.
and they had this thing called Agreco, which grew like a weed, but no one really understood. And Christian Salverson is no more. I don't know what happened to it, but everyone, but Agreco was a very successful business in the area of power generation. So I would say 4imprint is the unwanted child of Bemrose, and unusually, through an accident of history, you've got this amazing business, US business, based in this weird place called Oshkosh, Wisconsin. I shouldn't say it weird. I've never been there, but I know. It's lately, it's a very different part of the world. And as luck would have it, this guy who runs the business today and is very successfully growing the business still only has a market share of his addressable market, single-digit %. He can continue to grow this business at these unlikely levels for many years to come. And the shares have, like everything, derated massively. And I'm not suggesting to you or any of your listeners that you should go out and buy these shares. But I think that I've had a long association with this company, and it's developed deep conviction that they know what they're doing, and they're in very much control of their own destiny. And I have no intention of becoming a smaller shareholder in the business anytime soon.
Yeah, well, I would imagine if you've paid £3 or £4 for it, there's a lot of goodwill there on your part, anyway. I'm just looking at, it's very asset light. They've only got about, I've looked at the 2021 report. They've only got about just slightly over 1,200 employees. Interesting that 98% of the revenue is North American, just less than 2% UK and Ireland. But I'm trying to find the Achilles heel here, and I look through even what about a pension deficit? That's in surplus, and that's
paid off, I think. Yeah.
Yeah, they're looking for that to potentially buy that out. But
yeah,
if you look at the, I was thinking about the film Alien, where Ripley says to Ash, how do we kill it? And he said, well, you can't. It's the perfect organism. And I'm just thinking, is this the perfect business? Or where can it run aground? Where can the moat disappear, and what could go wrong?
Well, yeah, I think I wouldn't underestimate, the passion and the commitment of Kevin and his team in Oshkosh that makes this business tick every day. But Kevin is not the founder of this business, but he talks like he is. I don't mean that in a arrogant way. He deeply understands the importance of culture. He understands the risks in the business, and he manages them very effectively. Doesn't mean he'll always get it right. And, it looks like the US economy is probably heading for a weaker patch, and spend on these items is possibly some stage in the future will again. He's been through, I've ridden through several downturns with him. it's a business where you can set the sails for a storm once it starts very effectively, because you just cut down the marketing spend and the cash comes in. So he's got that sort of self-stabilizing mechanism built in. It doesn't mean the share price doesn't go down. It just means that, things will get better. When things get better, it'll be a bigger, stronger business, because his competitors, many of his competitors, smaller competitors, won't be able to survive the storm. So you got that on your side. What I was concerned about, coming out of lockdown, particularly with the geopolitics as it is, a lot of the products that his suppliers supply him, that go straight through to his customers, a lot of the product did originate in China. These are all manner of, key fobs, T-shirts, polo shirts, holdalls, jackets, anything that, can have a logo on it, basically. A lot of these products, his supply chain starts in other parts of the world. It's and particularly China. So there were moments in the recent past where I felt, maybe there's going to be a problem here. But touch wood, so far he's managed it very well. They've diversified their supplier base and hasn't been an issue. But it's not a straightforward business to run. Otherwise, we'd all be doing it by any sense. But he's got this. I think he's genuinely got this network capability. I think it's benefits from being this sort of perverse situation of being a high quality US business that happens to be listed in the UK. Because I honestly don't think most UK investors really understand this attraction of affiliation that Americans have, and why it's not we think, if you, promotional products, you get these cheap pens in a reception of somewhere you go and you chuck it in the bin. This is different. It's all about being affiliated. It's the same, but it's different. In the eyes of in the American market, it's different, and they have this affiliation that runs through them. This desire to be affiliated with organisations.
Yeah. Well, what a great podcast. Jeremy, all I can say is thanks for joining us today. I've really enjoyed our conversation, talking about your investing journey and those specific investments that you're involved in. Where should people look to follow the continued adventures of Jeremy McKeown?
Well, if they're so inclined, they can. If you want to read about what I think about what's going on in the world, then I write a blog that's called Hypernormal Times, and that's at hypernormaltimes.com. If you're interested in podcasts and listening to interesting people with interesting stories to tell about their business life and the businesses they run, then it's in the Company of Mavericks, and you can listen to that on any podcast platform. Both the blog and the podcast is also hosted at Progressive Equity Research, which also offers sponsored research, so that's an interesting site to visit, in my opinion. And I'm always posting stuff on LinkedIn, so it's just Jeremy McKeown on LinkedIn. But thank you for having me on the podcast, Mark. I've enjoyed the conversation. I hope I haven't rambled on too much.
No, it's been fantastic.
I've enjoyed sharing your company, and I'm looking forward to the swim home.
Yeah. Thanks, Jeremy. Cheers.
Okay. Take care.
Well, that's it for this episode. We hope you enjoyed it. And a big thank you to Jeremy. If you'd like to swim back to the mainland and join me here in Stockbroker's Bar, I'll buy you a drink. No question in a bottle this time, but if you do want to ask Mark a question, please post it in the comments, and hopefully it'll reach the island in time for the next episode. As usual, please remember, all the information on this podcast is for information only, and it is not financial advice. Anyway, I have some Cuba Libre lined up on the bar for me. So, I'd just like to say thanks for listening and see you next time.